welcome to Scrolling with Ceazor. Today is February 9th, 2026, Monday. So first day back after a pretty dull weekend for the most part. I guess I can say that. Like, the dump happened just before the weekend, so let's take a look back. So yeah, Saturday, Sunday, it was kind of sideways. I think it was Thursday or Friday we had those huge dumps. As you can see, I'm back in range on my position. I did close that Uniswap position I had, and now I'm just running this single concentrated liquidity position on Carbon DeFi with WST ETH and SUSDS. So see how that goes. I'm hoping it doesn't come back at the bottom anyhow. However, if we do look at gold looks like it's kind of crabbing quite nicely. And I do have this position as well, which is gold versus SUSD. So interest-bearing stable coin versus gold. And it is crabbing around inside my concentrated liquidity position on Carbon DeFi. Now, I was going to do like a reoccurring order, but I don't know how bad it's going to. I don't want to pick some ranges right now, so I'm just going to cover the whole thing with a concentrated liquidity. So that's kind of a quick look at the market there, what's going on and so forth. But let's move on. Today I want to kind of jump into some news today, and again, as always, none of this stuff is financial advice. Just me talking, blowing hot air at you, and you hopefully getting entertained and curious and want to look a little bit more. So today I want to talk about CowSwap. Now, CowSwap did not pay me to highlight them. This is not sponsored mention. This is just a protocol that I've always liked and I've always liked using, and I wish it was on every chain, but it's not. It's only on several chains. However, the other day I did do a swap with cross-chain swap on CowSwap, and I was quite pleasantly surprised at how good it was and how cool it is. Now, if you don't know how CowSwap works, I do have a video on my channel that kind of gets into the nitty-gritty idea of it, but basically what it does is it's like you tell CowSwap that you want to do something, like an intent, right? And then CowSwap looks around for other people that have what they call a coincidence of want. So they look around and they're like, hey, does anybody else want to do the other side? And they're like, oh, this guy wants to do some of the other side, so we'll match these two traders together, and then the rest will throw it through the liquidity pools. And they have these off-chain solvers that kind of just monitor this CowSwap mini mempool of people who want these intents, and then these offside, they have an auction to see who can do it the best, and whoever does it the best, whichever basic algorithm does it the best, then they get to solve it and they get a small cut out of it. Now, I wanted to show you this kind of CowSwap type thing. This is basically, I've got some magic tokens inside my wallet here. I'm not going to send this because it's 4 cents, right? But there's this is on Base and this is on Arbitrum. So I'm basically telling CowSwap that I want to sell this token and I just want USDTO on Arbitrum, and this is on Base, and it just lays out exactly everything that's going to happen, and then I could accept this and wait for that to actually happen, right? Now, CowSwap's not very fast. I wouldn't say it's it's not an instantaneous trading mechanism. It's basically for people who are not in a huge hurry. It's not going to take 10 minutes or 20 minutes, but it's it's going to take some time, maybe a minute or 40 seconds or something like this, right? But I really like how they've set this up so you can now do these cross-chain swaps as well, and basically it's going to tell you everything that it's going to do, and then if you accept it, you don't even have to pay gas. You just accept it, and the gas is basically taken out of your output, basically. Anyhow, so there's that. Oh, you do have to sometimes approve tokens to do this swap, but I really like this this layout. And if you are doing any kind of swapping, I highly suggest you use CowSwap or LlamaSwap or KyberSwap or any of these DEX aggregators that are out there, instead of just going to Uniswap or Velodrome front end. and trying to do a swap there. I did ask AI the other day about like, oh, what's the best place to do a swap of these two tokens? And they were both stable coins, and it was actually on Optimism, where they still have USDC and USDCE. And I was like, I just want to have them all as USDC, right? So I asked AI, Claude actually, and they're like, oh, just go do it on Velodrome. And I checked on Velodrome, and it was significantly more expensive. Like it would have cost me about $21 to swap that. You know, it was more than $50,000 or something like that. Like it would have cost me more like $20 to swap on Kyber Swap, and on Velodrome it was going to cost more than $1,200 or something like that. So yeah, you know, almost always want to use a DEX aggregator, especially as you go up in value. If you're swapping like, you know, $50 worth of meme coin, then maybe you don't need it. But like if you're above $1,000 and you're not using a DEX aggregator, you're just giving money to other people. So anyways, check out CowSwap. It's always worth checking out and so forth. But let's move on. So here we have the DeFi Dojo, Steven. He's doing a periodic reminder. And I want to kind of dwell on this a little bit and talk about it. So he's talking about Liquidity, the bold stablecoin here. And let's see what it says. Periodic reminder that stability pools are inherently long black swans and liquidation cascades. Congrats to everyone who held SBOLD or the yield tokens this past month. So I do have some of these SBOLD. Well, I have Y, the yearn version of it. So basically what is he talking about? Okay, so I'm going to use a chart to explain it to you, just kind of. So if you look at this, let's just use an ETH USDC. So let's say you have, you put SBOLD inside, you had put it here. You had some BOLD, and you put it into the SBOLD auto compounder, or even into the just the stability pool. And then as this cascade happened, people are getting liquidated, and you're buying the ETH below the market price. Now in the yearn or in the SBOLD, then as it's auto compounding. So as it's claiming these dumps, right? It'll then auction off or sell off that ETH for more BOLD. So people are like losing their collateral in a sense that they're getting liquidated, but that liquidation is benefiting the people in the stability pool quite a bit. Now, if you just put yourself in the stability pool, then basically you have a bunch of ETH now to claim, or whatever stability pool you are in, and you basically were buying the dip. And if ETH recovers, then you can sell that later. So it's a choice of whether or not you want to just let the keepers automatically sell the ETH as it's going down for you. And again, like it's not like you're buying and selling immediately at the same price. When you get that redemption, you get a premium on it. So you're buying below the current price. So you're getting a little bit of extra, right? And then selling it at the current price. So those auto compounders are profitable still, right? So anyways, I wanted to kind of mention that. So it's always worth checking out. And this is like a protocol. It's like immutable, all on chain. Like, no, it's just good stuff, right? So check it out, okay? Froggy Economics. I don't know, what these squares ain't mean anymore. But he's talking about something here, okay? So he's like, arguing that curve finance is about yield and not execution is just about the most flawed statement I've seen in my entire history on chain. That's pretty, hyperbolic, but let's see what Surf Liquid said to kind of see what he's trying to dunk on, right? So this debate misses the point. Curve plus FX are DeFi, but yield without execution discipline is just leverage with nicer UI. L1 isn't dead, it's maturing. At Surf, we see it clearly. Real alpha now comes from how you route, cap, risk, and rebalance, not just where yield exists. Now they are arguing about this, and I don't really understand. Like maybe Surf Liquid's a DEX or something. AI run on-chain savings account with 5 to X bank returns. Yeah, I don't know what this surf liquid is, but I think they're basically trying to advertise below Frog Economics post on Curve and FX and stuff like that. But I do agree, like if you look at the Curve Finance, let's see if I can bring it up with a quick look. Curve Finance price curve chart. Let's see if I can quickly see kind of it in here anywhere. Yeah, I don't see it off the top of my head. I don't want to dig, but basically, Curve Finance, they're the ones who basically, like, it's based on Curve, right? So they made this like stable swap curve that allowed for cheaper swaps between stable coins, because most of the line is straight and then it curves on the ends of the line. So most of the time you're getting 1-to-1 on your stable coins, unless it's the balance of the pool is quite drastic. Like, it depends on the ratios and stuff like that. I don't want to get into all the math of it, but basically if the pool is like, 90% one stable coin and only 10% the other stable coin, then you're not going to get 1-to-1. But if it's like 50 or 60-40, you're probably going to get 1-to-1. Now, minus the trading fee, of course, right? So I think that's what he's trying to get at, like what the Froggy's trying to point at. Like, the Curve was designed look, it's OG, right? It was designed in DeFi terms a long time ago, but it was designed with execution of stablecoins in mind. It made stablecoin swapping much better. Now, is it the best possible thing that you can use to swap stablecoins? Maybe not. No. Like, there might be like ways to like swap collaterals and stuff like this that provide better execution. And there is, of course, the truth that like if you provide liquidity to Curve, your mindset is not, oh, I want to provide the best execution to all traders. No, your mindset is, I want yield, right? That's why I'm providing liquidity. So of course they have to balance that. They have to make it profitable and make yield a prominent feature of Curve Finance so that people will use it to provide liquidity. So it's kind of like both are right and both are wrong, I guess. I don't know. But let's keep talking about Curve. Okay, so Curve has a stable coin called CRV-USD, and it's prominent inside yield basis. So Llama Risk is like basically the DAO-ish thing that kind of helps Curve to assess whether or not things are risky and they should or should not be added to the Curve ecosystem. So they cover liquidity pools. Mostly traditionally it was talking about like, should we give them a gauge or not, right? So the DAO is kind of like voting on that kind of stuff. But now that they have this Curve CRV-USD stablecoin, again, I do have a video on Curve Finance's CRV-USD, and you can check it out. You go to my channel and find out if it's something of interest. You can just go to my channel, search CRV-USD, and you see decentralized stablecoin with soft liquidations. It's pretty interesting and pretty cool. But now that there's yield basis around as well, so yield basis here, you can see that there's even more demand for CRV-USD. It has more intricacies and more complexity, and the DAO has made some changes to do this. So recent market conditions, and they're talking about these dumps, and specifically on BTC as well. Big BTC dumps, right? These dumps here created a lot of pressure on the peg for CRV-USD, because every time someone arbs it, they're selling CRV-USD, and these yield basis pools are kind of minting CRV-USD out of thin air, so to speak. Not exactly, but you can watch my yield basis video and you can understand it. But let's read through the actions that the Llama Risk has taken. Okay, so CRV-USD revenue share is increased to strengthen CRV demand. So now if you take your CRV-USD and you just deposit it into the let's just go to it, okay? Curve Finance, and go to Llama Land, and then go to Savings CRV. So this current TV APY is around 11%. So they want this to be high, so people will just mint and put it in here, okay? Which is pretty good, pretty interesting, okay? So that's the first thing. So so that the CRV USD is not only dependent on yield basis for demand. They want people to mint CRV USD and just put it in there and get the good APR, okay? Moving on, here we have eDAO. I believe that's like Llama Risks DAO, but who cares? eDAO is authorized to soft pause yield basis pools in case of emergency. So now the eDAO can react to the markets. So I don't know, maybe stop people. I don't know exactly what it means by a soft pause. You got to kind of like read through the entire proposal, but anyhow, that's a good. It's like a panic button. eDAO is authorized to draw 4,000 USDC. 400,000 CRV USD from the DAO treasury for peg defense. So if the peg does start, getting attacked, they can support the peg from the treasury. Mint rates are now. I do not understand like how is having more. Usually the problem with the peg is that people are selling CRV USD for stablecoins like USDC or USDT. That's usually what's happening. So the CRV USD starts decreasing in value. So I do wonder why getting a big bag of CRV USD is going to be useful at all. What they need is USDC or USDT to buy these coins, right? That's what they need. But maybe there's something that I'm missing, and so forth. So you can again read through the proposal to kind of see if there's a better idea. And then mint rates are reduced to limit repayment pressure. So this is a little bit hard to understand, but if we come down here, we can read it here. A vote is underway to mitigate high rates in the CRV mint markets. So if you go to here, and you go to Llama Land, and you go to markets, and you look for mint, right? Not lend, but mint. The net borrow rates are very high. So if you want to mint CRV, it's pretty expensive right now to mint CRV versus any of these collateral backings. And that's kind of a problem, okay? Because nobody wants to mint a stable coin and pay 17% to mint a stable coin. Nobody wants to do that. Like, I don't want to do that. I want to pay like 3% or 2% or something like that, right? So there's this proposal to reduce the cost to mint, so then people will mint more for other purposes instead of just letting yield basis be the only main dominant minter. And the last part here is defined escalation paths for additional action if required. So this is not completely clear, but you can kind of read through all of these and get a better idea of what's going on. But I do like that they like Llama Risk is there, and they're trying to, as a DAO, they're working together as a hive mind to kind of figure out how to make this thing more better than it currently is. Like if you do look at the peg, if we go to, let's just quickly check any of these charts. Go to Dex Screener, I'll leave that site, and just quickly CRV USD. And I'll just use this first one here. It looks pretty good, but as you can see during those, there were some drops, like peg all the way down to like 96 cents and so forth. So there was some, volatility, and then it's back on peg, but it's pretty consistent. Like there's always like these volatility points, right? But again, these spikes, these drops, these rapid drops, what they do is they liquidate people, and then if you get liquidated, then you're not going to come back in mint CRV USD again. Okay, so I think it's important for them to maintain the peg, and like 96 is not too bad. It's not like it went down to 60 cents or something like that, right? But still, like 96 might be enough to liquidate people. but again, it's like they have the soft liquidation. So as long as the peg recovers and it didn't go through the bottom of your liquidation band. So basically, if you think of it this way, I'll draw a quick line. So in CRV USD mint markets, when you try to mint it, it's going to basically give you a band, so a price range. So it might be something like this, right? And if the peg, it goes in there and kind of comes out, then you're pretty much okay. But if your band is like that and it goes to the bottom, then you get fully liquidated. So you kind of have to be conservative if you are minting stablecoins versus ETH or USDC or whatever if you're minting stablecoins, be conservative about where you put your liquidation line or so forth. So let's move on. So here we have this guy's talking about the main reason. So he says apparently the main reason for yield basis decline is the misunderstanding of how it works, which is probably a good thing. Nowhere is it promised that returns will be without down draws. It is important to understand that the higher volatility of blah blah. So I don't know who he's replying to because that post is unavailable. But basically he's saying that yield basis, and when he says decline, I believe he means the price decline. I believe that's what he's saying. Okay, so I did reply to him with kind of help. So I say, well, this is how it works, and I have my video, so people who don't understand how it works can watch that video, and hopefully they have a better understanding. But I did say to him some important things to consider. Okay, so it says, when you say decline, I assume you mean price. That said, price is down more so because of the yield basis WETH pool. Now this is assumption. I haven't double checked this, but I don't think it's people who bought yield basis coin, didn't understand, and now are selling. I don't think that's the case. I don't think it's a matter of misunderstanding the purpose of yield basis coin and the fact that, if you stake yield basis. So if we go to yield basis, let's see if I have it open anywhere. I don't. So if you basically lock yield basis coin, then you're going to get some of the trading fees from and usually it comes in the form of yield basis, CRV USD and or WBTC. And now the staking APY has decreased because lots of people are staking. And I think there's something like 90%. I did check it, and I don't have it open right now, but so it says, so let me read what I said. Okay, so as WETH declines, it lowers the value of the other pools in the other token in the pool, and it gets arbed through the other pools. So if you look at this picture here, we have a pretty big pool with yield basis ETH with $14 million in it, and then there's $14 million in the USDT pool and $14 million in the USDC pool, and another 30 million in the USDC or USDT pool. So there's lots of liquidity. Now this might be a different token actually, so I'll skip that and just say that these three pools are the pools for this token. Now, so as ETH lowers in value, it lowers the value of yield basis because it's in this pool with ETH. But then these other pools get arbed, and basically they're just going to sell. So they're just going to arb all of these prices down to equal the same 16 cents roughly that you see in this pool, right? So that's what I believe is the main culprit of why the yield basis token price is down. And then if you do look at like the yield basis actual coin, 90% of it is locked, so it can't even be sold. So people, there might be people who bought yield basis and they were monitoring to decide whether or not they wanted to lock, and they're like, hey, the locking APR keeps going down, and that makes sense because 90% of the tokens are locked, right? So I'm not going to lock, I'm just going to sell it again and get out of this. Or there are just price speculators, chart traders, right, who wanted the hype and bought the hype and are selling now. Or who knows? There is definitely, this is the case in some factors. However, I don't think it's the main case. I believe the main case is that WETH has declined in value itself and brought down the value of yield basis, which was then arbed. Moving on. So here we have Stacy Murr talking about Mega ETH. I did see a tweet over the weekend. I don't have it here, but I will mention it. And it was basically, I'm gonna find it as well because I think it'll help me to talk a little bit. So while I'm talking, I'm gonna kind of dig around. So Stacy Moore says the Mega ETH mainnet just went live, but no Mega token, not for now. The recent stress test processed 10 billion transactions, which is more than Ethereum's entire 10-year history. So Mega ETH is doing what they said they were going to do, right? They are pumping out massive amounts of high throughput chain, which is fantastic, okay? But even with those numbers, the team decided Mega will not launch until the ecosystem gets traction, which is important, I guess. Like, they don't need to just dump the token on the market. They're trying to be strategic with it. So TGE can only happen after hitting one of these milestones. So I'm going to read these out. I do think they're important, okay? 500 million in USDM circulating with 25% deposited in apps. So, these are like KPI metrics that they want to make before one of these happens. That they will launch the coin. Okay, so $500 million in their own stable coin, and at least 25% of them put as like in apps. So in lending markets, in liquidity pools, stuff like this. Okay, 10 apps deployed with 100K transactions across 25K wallets. So unless there's traction, people using apps alive, and apps being used, okay? And 3 apps earning $50,000 daily for 30 straight days. So those apps are actually, generating revenue, not just being wash traded, okay? So not just pumping metrics, but actual people are actually paying money to use those apps for 30 straight days. Okay, so I do think these are pretty good metrics it's so hard because let me go find that tweet that kind of I wanted to talk about. So let's see if I can quickly find it. I'm sorry to scan through while I'm recording, but this is the manner of things. Here it is. So somebody wrote, this guy here, Duo9, wrote that, Mega ETH has decided to rug the Mega token. And Gabriel's like, it's not a rug. They're just being careful, right? And then I replied to Gabriel Sapiro, there will always be FUD, even if they did everything correctly. So, of course, someone's going to FUD it, right? It's a simple matter of how true is that FUD. I think Duo9 has a valid points to consider in the picture indeed. But adaptation in these markets is so important. They simply have to allow anyone to back out ASAP and hope that the opportunity cost doesn't create more FUD. So what am I talking about here? So basically Duo9 is pointing at Mega ETH saying, you took investments with this kind of announcement, people paid money, and now you're changing the goalposts. And he calls that a rug. So Gabriel says that's not a rug, that's adaptation to the market conditions. And I think that both of them are right. Mega ETH has to protect their token. They can't just dump the token on the market and see what happens. If they know it's going to not work because of the current market conditions, then they have to be conservative. However, they announced something and they're not doing what they said they were going to do. They're changing things. So what they have to do is they have to allow people to get their money back because they are breaking the deal. So you must refund money. And what I talk about here, opportunity cost loss, basically what I'm saying here is that people put money in that they could have put to work elsewhere. And that's a loss to them. So if you just give back if I put in $100 and I left it in there for a month and you give me back $100, then I'm not going to be super happy because I lost a month worth of yield on that $100. It could be, maybe it's $2 or $3 or something. I don't know exactly how much it would have been based on the different opportunities out there. So that's kind of what I'm saying here. Like, they kind of have to let people back out if they're changing the goalposts. But I don't think changing the goalposts is a terrible thing. Now, this does go one more thing I wanted to talk about. Last week, I talked about I talked about Railgun, and I called it a rug because basically they stopped supporting their front end, and people had to I had to, in order for me to interact with it, I had to use Etherscan, and it took me a little while to figure out all the parameters I needed to put in and stuff like that. And I was just like, that's kind of a rug, right? Like some people can't do that. Some people can't run a front end on their own computer, or interact with Etherscan and stuff like that. So I called it a rug, right? And here is a different kind of rug, and I think what we have here is a problem of like terminology. We kind of have this in our industry, which is kind of a problem. Like if you say, "Oh, that's degen," right, which literally means degeneracy, right, which is a bad thing. You can kind of say it, that kind of means it's cool and sweet, right? Oh, that's sweet, or so we kind of have this like slangy thing in the industry where words don't have exact meanings, and people use words in different ways, and it creates confusion and inaccuracies and arguments out of nothing, right? So Gabriel is a lawyer, so maybe he's like he's accustomed to like exact terminology. The meanings of words are exact and precise, whereas maybe Duanon is just saying, oh, it's not. Maybe he doesn't mean that the team is completely rugged and they're walking away with everybody's money, but he feels he wants to express his like frustration on the fact that the deal is being changed on him, right? So yeah, you could check that out, and we can think about this as an industry, and maybe it's something that we should try to rectify, especially if we want to be taken seriously. Okay, let's move on. Okay, so here we have Perry the Platypus. He's new to me. So basically, he's got a huge list of things, right? He's like, DeFi momentum keeps accelerating with buybacks, new tokens, cross-chain expansion. Here's the latest news. And he has a whole bunch of like tagged things today and little quick, just bite-sized news. And I like this post. It's pretty easy to get a lot of information into such a small little thing, okay? And just, I don't want to read it all to you because it's just a lot, but like I'll just nitpick a couple. So Pendle is expanding to Compound. So now, Pendle Finance is going to support Compound Finance positions. Let's go. Venus and Fluid are building Venus Flux, the first unified layer on BNB chain. So Fluid is expanding their licensing to Venus now. Venus is now going to join the Fluid ecosystem team as, what's that protocol on, it's off the tip of my tongue. There's one on Solana that basically did the same thing, okay? And I wish it'll come to me once I stop recording, probably. Moving on, Coinbase has listed Hyperliquid, so I guess Hype token. So yeah, this is a nice post, Perry. I'm going to share it with people so people can kind of follow you. It seems, I don't know if he's doing this a lot, but I will follow him and see if he does this a lot, okay? Nice post. Moving on. Here we have 0x Dr. VV.eth, okay? Gentle reminder, Protocol FX, FXUSDC, is still the highest APY stablecoin yield-bearing, fully collateralized on the longest time frame. No fake spikes on the market, glitch move, just consistency, stability, and real yield. So he's got 11.25% in the FX save. So that's basically take FXUSD and deposit it into the savings account and get 11%. S Dollar is quoting on this picture 7.8%. YUSDS, so Yearns SUSDS is 7.3%. So yeah, those stable coins are, and most are like around 3 or 4%. And there is a message here that says it has been less than 4% for a couple days now. Where did you get this data from? So it's kind of ironic that he's like, no market glitch move, just consistency. So I don't know. Now that is a 90-day average. So it might be 4% today, and it might have been 20% yesterday, and 25% the day before. I don't know, but anyhow, you can check it out. I do think I like this protocol, and they like me too as well. So moving on. Here I have Rameses. So I had talked about them last week and how they have this new auto vaults, which is fantastic. So if you put your RAM token into XRAM, so you turned it into a voting thing, you can then put your XRAM into these vaults, and the vault's going to vote for you. It's going to spread your votes across like everyone, like it's spread it based on bribes, right? How much bribes are there. And then it's going to automatically sell all the bribes for some specific token, which is awesome. And you can do this, like this Ramses is currently on Arbitrum, Hyper, and Polygon, but you know that auto vault is only on Hyper right now, but it's very soon going to go to these other chains, I would assume. Okay, so here we have Sam at Rise, and he's like, take a look at this. He says, appears there can only be one global reserve currency. And his Tether's Euro stablecoin is like basically depegged, like completely worthless. According to this picture, right? I didn't double check this, but yeah, so that there's that. Now that I think that doesn't, it's not a matter of like the Tether system being faulty, because it's mostly manual. It's just a matter of nobody cares about using Euro Tether for some reason. Maybe the Europeans don't like Tether, or maybe the Europeans don't care about using the Euro stablecoin to hold their value. They want to hold their value in US dollars. I'm not exactly sure. Crypto is definitely US dollar dominated, so maybe that's why. I don't know. I always want there to be more stable or more currency, fiat currency stablecoins around. So I feel kind of sad that this is the case for this stablecoin, and that it happened basically this year. So it's the peg started getting tested late December, and then now it's just pointless. Yeah, worthless. Anyhow, you can check it out, especially if you're in Europe. If you're in Europe and you're holding this Euro Tether stablecoin, then I don't know, figure out what you got to do, dude. Here we have a PEX Shield alert. So some protocol called Infinify has exploited for $32 million. It's all turned into ETH and sent through Tornado Cash. So goodbye, money, goodbye. I don't know anything about this Infinify, and they hashtagged it instead of proper tagging it, which is kind of strange. PEX Shield, why are you doing that? And yeah, so it happened in February 2025. Oh, so that was like a year ago. What? Suffered an exploit in February 25 due to the compromised admin privileges, resulting in a loss. Why are they telling me this today? So today's February 2020, and maybe that's a typo. Maybe this is not 2025. Let's see. Yes, 6 days ago. Maybe it's a typo. Maybe it's 2026. But anyways, there's that. If you're in Infinify, I'm sorry to see. I'm sorry for you, sir. And yeah, moving on. Okay, so this one here is an OG protocol that I consulted with a long time ago. And I did get an allocation of these ring tokens. And basically, I've been just LPing these ring tokens for years, okay? And basically what this ring token is now worth is it was a protocol. It was a yield like vault protocol when I first like met them and was talking to them. But now it's basically like an index of VE33 dexes. So they have voting power on Velodrome, Aerodrome, Equalizer, all these different dexes. And if you provide liquidity with the ring WETH, then you're pretty much guaranteed APR, because they have so much voting power that they just continue to do it. So they have a picture here of it's like 63% if you were to provide to basic volatile liquidity pool. So that's ring WETH, which is fantastic. So you don't have to do any rebalancing, no like concentrated liquidity stuff, just basic full range constant product liquidity, and you get 63% APR voting. That's not voting. Providing liquidity APR in Velo on this. Maybe they don't have Aerodrome. I'm not sure. They must, because they had Velodrome tokens. So anyhow, so you could check out Ring. It's kind of like an index fund of and so forth. But I've I'm biased as well because I do have Ring tokens, so I do want them. And every once in a while they do burn a big bag of them, and it's all themed around the Hobbit and so forth. But anyways, let's move on. So Sam of Frax. I always like when Sam kind of comes out and speaks, because I'm biased as hell. I have a whole bunch of Frax ecosystem tokens, and I hope I'm pretty long-term bullish on them and so forth. It has been kind of slow a little bit to get things going, but they're kind of going the TradFi route and kind of trying to integrate TradFi into DeFi. So I do hope for them in this manner, mostly because I'm biased and I have coins in their ecosystem. So anyways, let's move on. Let's read what he says, okay? It's more like every other company is going to be an API company. It's either API, money, or AI. Since you can't vibe code. So I guess someone's talking about like AI is going to take over coding, right? And, and so forth. And then he's like, you can't vibe code certain financial primitives like deep liquidity, money, stablecoins, scarce value, etc. So he is kind of still like what basically he's saying, like vibe coding is taking over a lot of things, and like it's pretty hard to like vibe to compete with vibe coding nowadays, especially with Claude, and all the devs are kind of using Claude and getting their work done much faster, much easier. But you can't code value. Like you can't just code it into you need money in order to give things value, especially in DeFi. So for example, like you can't just code a token and be like, yeah, this token's worth $1 and there's 10 million of them. Now I have $10 million. It doesn't work that way. It has to be put into a liquidity pool or some sort of financial instrument with actual monetary value. Then it can be worth. Now you do have to be careful because market cap can be deceiving. So for example, if you mint $1 million coins, and you put one of them with $1 in a liquidity pool, the liquidity pool now quotes the value of all those tokens at $1. So you now have a market cap, even though there's only $1 of liquidity. So that's basically what low float means. But if there's a lot of volume in that liquidity pool, then you can kind of sell through the volume and extract that money that way. But that's kind of what he's trying to get at, not so much about the valuation and the low float stuff, just that like there are some things that AI can't do. The AI cannot create value out of nothing. It needs actual monetary value to give stuff value. Moving on. So here we have the last bit of news that I have is the last couple of posts I have here is about Andre and Flying Tulip. In the past, I have ghosted protocols, not because of the idea or the tech, but because of like social reasons. For example, like maybe the founder had said something, or I had some sort of interaction with someone from the team, and I was like, yeah, I'm not touching that because he's there, right? And I've been trying my best to kind of get away from this. And this news here about Flying Tulip and Andre is pretty crazy, okay? So he calls it the guy who was the CTO, Chief Technical Officer at Sonic Labs, was yapping about Sonic not delivering the necessary infrastructure. So Andre basically saying that like he couldn't launch Flying Tulip because he was waiting for Sonic to produce some sort of tech. And you can read through it, but basically what I kind of got from this was he was waiting for fee monetization to become automatic. Now, I'm not sure. I didn't talk to Andre about this. I didn't ask him. And I'm only reading what is inside this post, right? And that's kind of what I took away from it. And because Sonic did not produce like an automatic fee monetization, like immutable system, Andre did not want to put Flying Tulip on Sonic yet, but he didn't want to delay forever, so he's basically launched it. Now, if you go here, it does say intent supporter participation is now live. So if you did participate in that that quiz that kind of showed that you understood the system somewhat, and you can now go and allocate some funds to this pre-sale type thing. I do have videos on both of these, right? Let's go to Andre. So Andre has this huge long post about this. You can read through it, but there's just like 6 or 8 points about like what's going on with Flying Tulip and why is this? It's just a reiteration of stuff. Now I did post below this. I've got videos on both the Flying Tulip system as well as the Flying Tulip pre-sale, how the thing works. So if you don't want to read through all this, you can kind of watch that and get a good understanding what's going on. Now it goes back to my point where I was like, I'm trying to use logic to make decisions as opposed to any kind of social reasons like, oh, I don't want to touch this purely because Andre, and I lost money last time Andre had a product. I'm trying to stay away from this idea and kind of look at it with more of a logical reference, right? And the way it's set up, this put system where you can allocate money, the money is then deployed to yield farms. Those yield farms yield is what funds the system, what funds the team to work. But at any time I can just get back my initial capital. So I'm giving up my opportunity cost, like my yield. I'm giving up my yield for the chance of getting Flying Tulip below market price. Well, at market price. And then when it does launch, so that NFT holds Flying Tulip tokens and grants me access to a refund. So I can, at any time, I can take out Flying Tulip tokens and give up my capital and then sell them or do whatever I want with them, right? Or I can just say, you know what, I'm done. I want back my initial capital. And I can do partial as well. I can say, oh, I want back half my initial capital and I'm going to wait a little bit longer. And then the Flying Tulip goes up in value. I can take the Flying Tulip and sell it or do whatever I want to do with those things, right? So to me, it's completely it's like, the only thing you have here is smart contract risk. Like you have no financial risk based on the logic of the system. So I feel like, now again, I'm biased. I'm participating in this raise or whatever you want to call these NFT put options or whatever you want to call these things. I'm participating in this, so I'm biased. But I'm trying my best to kind of look at things this way because in the past I've lost opportunities that I shouldn't have lost because I used social reasons to not do things. Now, I'm not saying social reasons are a bad thing. Like sometimes you have to kind of that team has screwed me 3 times. I'm not going to let them screw me again. So I totally understand that other side of thing. So I'm kind of, I just feel like I should share what I'm doing with you guys so you can kind of make your own decisions. But if you were to say to me, yeah, I'm not touching that because Andre's there, then I fully get it. I'm not going to convince you otherwise. Anyhow, I do have one more. I'm sorry to say, I thought that was the last one, but this is important too. So we have Stability DAO. Stability DAO, the stable token, is now available on Plasma Network. Here. Now, why am I talking about this? Because I was wrecked in these meta pools on Sonic. Basically, and the thing that makes me sad about this is that it was exploited. There was an exploit, so a rug on the yield source that my assets were sent to. So I put my assets into Stability. Stability sent my assets to a yield farm. That yield farm rugged, and then Stability lost. So I lost all my money, right? So can I blame Stability? Sort of. It's like due diligence, but it's all on me. This is DeFi. It's my fault, right? I shouldn't have put my money into this protocol. However, what I don't like about this is they announced this complex plan to recuperate money They said, like, in September, we will start using 20% of all of our fees to start recuperating the losses that people incurred. And it's now February and still nothing. And if you go to the Discord, even the person who is part of the team is saying, oh, it's over. So it's like, really? Like, you're better off not even saying anything and just rugging than saying and then rugging. Or maybe it's not a rug. I don't know. But anyhow, yay, good for them. Let's move on to nothing else. That's it for today. I hope this has been interesting and useful. I'm sorry to end on a somber note, but there's that. So thank you for listening, and goodbye.